it's crazy.
Yeah.
Welcome, everybody. How are you? My name is Michael. I've been trading for 32 years.
Hey, see, he's with the process though. He's following the. That's so great. That was hilarious. Thank you for doing that.
I don't have the luxury of being able to have the typical engagement, but I'm actively listening now. So I don't have anything to really contribute to the geopolitical stuff, and I'll just leave that for you guys to discuss. I'll listen.
Right. Yeah.
I'm just going to have my hands off of that going forward, and I think that'll be sufficient enough.
Yeah.
But as it relates to the markets, this is the first person I heard talking. He mentioned my opinion about what's in the Eurozone. I'll just say what I've said stands, and I don't want to go any further than what I've already said. Let's just say that, and I want to keep my commentary germane just to the markets. Is that fair?
Yeah, no, I value and appreciate that, Michael, and I know we can help steer the conversation to ensure that we do that. I mean, we all understand the unique time that we're in, and I value and appreciate your thoughts, your feedback, and everything you're saying. So I think we can all just kind of align with that leadership, that energy. So
anyway, I'm listening. If you guys could continue, I'm fascinated to hear what you guys are talking about.
Sweet. Peter, jump up here, buddy. My boy from Germany, leading the ICT community in Germany. Peter, you there?
Yeah, I'm here. Can you hear me?
Yes, sir. Give me your
Awesome.
thoughts and 2 cents, pretty please.
Yeah, first of all, if Michael follows the procedure, I definitely need to do it as well. So, yeah, my name is Peter. I'm trading for nearly 4 years. I'm 32 years old, have a wife, a small little boy, 1.5 years old. And yeah, I'm engaging price action with a variety of ICT models, but my favorite is the model 2022 order smart money reversal of a market maker. Buy or sell model. So this is what I do, and I'm focusing on the New York AM session. So Kitt, we have the same time, like 9:50, 10:10. That is usually the window I'm engaging in.
I love it.
With that out of the way, what I heard from today's space of ICT. I mean, I'm the technical guy here, so I'm very much listening on how ICT navigates this very difficult market, because I finished my weekly review just prior to ICT starting his live. So I was in the right position to just compare and see. And it was interesting for me that he started off with the relative strength analysis, looking for the SMTs on the free index markets, the NASDAQ, the ES, and also the Dow Jones. And in particular, I mean, we often heard about SMT, the smart money tool, but to see him apply it with a line chart, and especially if he's looking for bearish markets, he's putting the line chart only on the highs to see it, and if to basically scan for the proper SMTs, and also if he's bullish, he's putting the line chart on the lows. I think that was a very neat and great detail for everybody who wants to see or wants to learn a little bit, because that was something which I didn't knew that he's doing that actually. So I was very much surprised and thankful that he shared that. And yeah, also interesting fact, as the person, I think it was Anthony, mentioned about the compression of the ES, very unprecedented. And everybody can see that the market is very difficult. So actually, I was also favoring the shorts, but man, it's very it's a very difficult market. So risk off one contract and following the assignment, just trying to stay solvent in the coming week. But I have a couple of ideas outlined for shorts next week. So yeah, and geopolitically, it's a whole different topic, man. There's so much going on, especially with the central banks. The central bank of Iran is also probably playing a crucial role in what's going on at the minute. So yeah, it's a lot of stuff. Sorry for my
fascinating take, Peter. I really like it. I really, really do. And we have a lot of folks here, I think, clamoring to get in that would like to speak. Quinn, Dan Trades, Arun, would like to keep it going, Peter. That was a really good take. And I'd like to get a few other folks. Wangaroo, you have your hand up.
Yeah, Kitt, you caught me off guard. I was asleep. You know, here in Kenya is
I got you, buddy. But you
yeah,
put your hand up, and it's no big deal. I thought you were asleep, but it's no big deal. It's all good.
yeah. So I saw the ICT live, and he was talking about where he thinks the market will be in the next, maybe in June, September. So I was thinking if tomorrow I did my analysis and the volume imbalance, he was talking about when if Monday forms a volume imbalance, we could have a suspension block, you know, tomorrow. So
Yeah, that's what he was saying.
I was thinking that was my analysis before even he was talking, and I was so delighted to hear him say that he is expecting a lower gap tomorrow. So I'm pretty excited to see what happens when it opens, and you know,
Yeah, I mean, we're gonna find out where we gap here in just a few. I mean, the weekly open, we'll be here for it.
yeah.
So
So he gave us an assignment to look at the Hunt brothers. I wanted to ask him where I can do the research about that story because it seems fascinating. Yeah,
I mean,
thank you.
I think Google and ChatGPT are really good references for you to search Hunt Brothers Silver Story, right?
Yeah, but I was looking at ChatGPT, but it's giving its research in point form. It's not that deep.
Well, we'll see if there's any more information on it. Good question, Wangaroo. Good question.
Okay, we can have other speakers.
Yeah, no, thanks for coming up, buddy, and kind of shaking off the cobwebs there in Kenya.
Yeah, it's pretty crazy here in Kenya. You know, I don't want to talk about it because our capital city is flooding, and we have like so stupid leaders, if I may say. But
Yeah.
you know, ICT even hates his leaders, so they are all the same.
Okay. Okay. Well, let's hear from a few other folks. Keep the conversation going. Keep it flowing. My boy Wangaroo in the house from Kenya. We heard from Peter in Germany. Our boy Trader Telly in his house. Quinn, ICT, and CRT. Well, go ahead, Quinn. You there, Quinn? Rant, rant, rant. Okay, Bonafide brand. Are you there? Everything FX.
Yeah, I'm there. Good evening, Kate. Good evening,
What did you
the
take
I.
from ICT's YouTube channel? What was the most thought provoking piece for you in your review of what you watched and witnessed, my friend?
Okay. I really love ICT trading, but
Yeah, but you didn't watch the episode. I get it, buddy. Dan Trades, you there?
I'm here, brother. Can you hear me?
I can. Tap in, jump in. You know the deal.
Absolutely. Hey, guys, my name's Dan. I'm 53 years old, so I'm in the ICT 50 club. Been there a couple of years. Good place to be.
Woot woot.
Personally met Kitt 2 years ago, so we're coming up on our anniversary, so I appreciated you, man, a couple of years ago down in Miami. And I just wanted to say, all praise to God, I'm out here on a walk right now on a Sunday, listening to you guys. Very thankful and grateful, even though I'm under deep attack. And I'll tell you guys, spiritual warfare is real. And our Lord Jesus Christ found me through Michael J. Huddleston 3 years ago, because I was an atheist for like 10 years after being raised a Catholic. So I've been up and down this whole road. And I ask you, everyone that's a believer out there, and even those that aren't, to lift up my daughter Samantha's name in prayer, because she's going through a 16-year addiction battle right now.
Let's say
So
a
the
prayer
way
together. We'll say a prayer together, brother.
I appreciate
Raise
you,
her
man.
name up. Pretty please.
So
Raise her
yes,
name up. Everyone, close your eyes. Pretty please in prayer. Dan's going to lead us in prayer. Dan, we are praying for your person. Pretty please. Talk about her. Pretty please.
Lord, I just ask that your light finds her. She's a believer in you, Lord, but she needs your protection. So just wrap her with your love, Lord, and please help her and her 6 children, of which 2 I'm giving care for as soon as I can. So I lift this up in the name of Lord Jesus. Thank you, Lord. Amen.
Amen, brother.
And thank you, Kitt. I just want to say
Amen.
we could go on tangents. I'm not going to be here for a while. I've heard that before. And
Yeah. Yeah.
I just want to
Don't you
say
worry.
that yeah, sorry if I'm stepping on someone there. The way I engage in price is I love doing higher time frame reversals. And the way I'm engaging in price lately is just by tapering. And I've taken like 2 trades this whole year because of everything I'm battling on the emotional side. And I'm taking to heart everything I've learned from Michael since 2023 when I found him. So that's how I engage in price right now, is various thin scalps every once in a while, literally only 2 live trades in micros. So I'm happy about that. And it's a 20K live account. That's the only reason. So Michael, you'll get a kick out of this. I found you because I was on top I'm not even gonna, whatever, top something, who cares, right? Some prop firm. I never heard of ICT until then. And I've been around the block. I've been trading for 15 years. I learned from a previous mentor who I won't name any names, but I went to the point of literally buying his business and selling it later. So I've been in the internet marketing business. I've been in the sales. I would say there's people that are traders that know how to market, and there's marketers that know how to trade. And make sure you know who you're talking to. And these 2 are the real ones here. Don't ever trust anybody else if you take my name for anything. But just want to say thank you for everything. And I can't wait to engage in price, and some of the spiritual warfare goes away where I can actually put some of this monies at work for myself. So I appreciate everything. Thank you, guys.
Appreciate you, Dan.
Oh,
Appreciate you.
if I could ask a question, it would be big picture, not even trading. It's I think one of the first speakers that talked today was, what's going on in the world, big picture, everyone, guys, girls, all of us. And I know Michael said he didn't want to talk about other stuff.
Yeah, it's here's the thing. There's in my opinion, there's a time to really lay down and speculate, and there's another time to really kind of observe. And we're just in a time where it's good to observe, which typically just means you talk less and you look more. And that's really, as much as we come together, and it's funny being a talk show, but we're really in a look and see. We're really in a let's watch and find out. And then we can, act and react as we do modelistically within, time and price. But outside of that, I do believe it's a good time to observe. And that's what we all get, is to observe and increase our experience through observation, right?
If I may,
Jump in, brother.
I want to kind of touch on something that Dan mentioned. Obviously, Samantha's going to be in prayer. I prayed with every word you said in agreement. In Jesus' name, I'm in agreement with that. But if I can just tap something that you said that I think probably went right over top of everybody else's attention or awareness. Obviously, you're going through something, and when a family member has the heartstrings like they would, and it's easy for us to look for an escape from that or a distraction from it. And I've talked about it over, I guess, maybe 10 years or so, talking about Forex and transitioning into focusing primarily on futures. But the psychological aspects of bringing in our problems outside the chart, bringing in our problems of relationships, health, needing to be significant, boredom. And I love the fact that even while you're going through all these things and wrestling with all this, which is very difficult, I'm certain, you said that you took 2 trades this year. Did I hear that correctly?
Yes, sir.
That right there, that is a hallmark to someone that is absolutely primed to do well. Because if you can contain yourself and not look for because you have all the reasons in the world to want to, just take yourself out of the worrisome thoughts of, can she overcome this? Can you find victory in it? Will she find victory in it? It's easy to see these types of things distract you, and you haven't done it. I just want to make a note of that.
Thank you. I appreciate that, man.
Explosive open here on the metals. Holy cow, gap down on the indices. I don't want to be too engaged in the markets, but it's hard not to be with Michael Huddleston in the same room. Tend to like to look at a chart. Unbelievable movement right now on oil. That's just crazy. Let's keep the conversation going, keep it flowing. We got a few more folks here, and just looking for thoughts, looking for feedback. Thank you, Dan. Dan, I'm in your DMs, so I mean, we can talk there.
How about that gap opening, guys?
Next up. We heard from Anthony, Dan, Wangaroo, and my phone's blowing up. Clearly, I've got folks. Oh my goodness! Stop blowing me up! Stop. Okay. Mbino, here, I'm trying to just get some folks up. Come on up. I'm just hanging out, chill. How's it going, buddy?
I'm good, boss. I'm great. Good evening from here in Nigeria.
So you're Nigerian. You just got done watching ICT, right?
I've been enjoying this space. Just
the space, but not the actual.
I've been enjoying this space, listening to you guys, and just want to just drop some few stuffs and then ask some questions. My mentor was actually on this space, and I saw a notification, and I was like, "What are you doing here, Momsy?" And just came and boom, I saw a lot of guys here, like a lot of friends, even some of my mutuals. I was like, "So you guys have been here, and you just hit the update."
I love the anecdotal stories. I just don't love the anecdotal stories. So some people I'm fine with it. Other times I'm not. Sorry. We're here for a reason. So, and I'd like the folks who come up here to get on board with why they're here, right? If you instantly don't align with why we're here, then it's pretty easy for me to just tell you to leave. So, Neo Pi, you're up. Neo Trader, you there, buddy? What a buzzkill. Low energy today from folks. Oh, there we go. Neo, you there, buddy? Neo. Try him one more time. Trying to get some folks up here.
He's probably stuck in the matrix, man.
I mean, everyone seems to be right now. I mean, we had market open, so. ICT student Deuce, Dean. We got some folks up here.
Oh, yeah, it's me now. I'm sorry.
was connected to
There's
my.
Neo.
Oh, sorry. Oh,
Hello,
damn.
I
I'm
think I was
sorry. I'm
connected
sorry.
to
I
poor
didn't see.
network.
Hello,
I'm
can I?
sorry about
Him.
that. Did you
I
guys
want
see the spec down?
ICT 2022
Oh,
model.
I'm just waiting for everyone to mute. Just a moment. Oh man. Uh, um. First, I would like to start by saying that it is the biggest moment of my life because I'm talking in my city that is listening to me right now. I'm so excited.
I know you are, buddy. That's cool. We're here for it.
Yes.
What do you
So,
got? What do you got? Hey, do me a favor. Tell us how old you are, where you're from, how you engage with price, and then any
okay.
feedback you got from the weekly review you watched today, right?
Oh, I didn't watch the weekly review, but let me start by saying my name is Ornell, and I love Neo. So, and I'm from Haiti right now. I'm
Hey,
living in
wait.
Haiti.
Who's talking?
Neo.
Okay, you're from Haiti, Neo. Okay.
Yes, I'm a nation. I'm living in Haiti. So I want to just say, ICD, I love you so much. You're my mentor. You're everything to me. I love listening to you. You're leading my life, and you're the person that made me believe in God. I was an atheist, and you're the person that made me believe in God. And
Bing,
this
bing, bing.
year, I prayed God for financial possibility to invest in the market because I started learning trading for in 2021. I think it was the universe that put that on my way. And right now, I'm just struggling with my psychology. For example, I got funded recently with $100,000, and I started trading on it. And one day, I took 11 trades, but I only raised $300 that day. I only lost $300 that day. I'm good at making analysis, but I'm just struggling right now with
What
engaging in the
what's the
market.
last what's the last 2026 content that you engaged with?
Um, Actually, I'm not engaging with recent
Okay. Well, then
videos.
Neo,
I'm just
that's why you're going to struggle, okay? And
okay.
I appreciate you wanting to come up here and you're fanboying out and you're breaking every single rule and you're really wasting everyone's time. So I appreciate you coming up here thinking that your voice is that valuable. Um, but bro, just go follow and tap into the 2026. This is for folks who are tapped in. You're not tapped in, but although you are a student, okay?
I will. Thank you.
Hello, Kit.
Deuce, jump in here.
Yeah,
Hi- Hello,
So
Kit.
I am
How are you? Are you listening me?
2022 model. Yeah. One of
Hello,
my
Kit. Are you
favorite of
listening?
all
I am
is
listening, but someone
Uh,
one
is
of
okay. I have just one question.
okay. Well, let's just see.
Yeah.
Can you follow a process or procedure?
Yeah. I follow. I am a 22-year-old from Pakistan. I am an ICT trader. I'm student of Master Michael from YouTube. I learned all knowledge from ICT, but right now, if we see the geopolitical situation in the world, and if we see the market structure and also time and price, they didn't follow, especially in gold. I just take trade on one micro. It's I think at secret and 212 logo, 350 AM. But I am observing one thing on 9:30 and also 8:30. The market didn't give respect to any PD array and also any mark the structure. What we will do continue. Can we skip the market for a little bit time, or we are just sitting in front of the screen and observing the knowledge, please?
I appreciate everything you're saying, ICT student. And again, I love you guys. If you guys aren't going to follow what we're here to do, then you're really not going to make any sense, and you're just going to become part of an edit, and it won't be valuable to the community. So, ICT student, another example, unfortunately, of it's not about you, buddy. I don't even know what you said. So Oil, holy shit, $10 move off the open. That's crazy. Crazy. Orpheus.
Thanks, Kitt. My name is Ophias. I'm from Uganda. I'm 30 years old. I've been trading ICT for a year now. Prior to this, I've been working as an auditor with Ernst& Young, specifically based in Africa, Uganda. So on my side, it's mostly to thank Michael for today's session. Largely, most of the analysis was mostly aligned to what I was looking at. And for gold, for what I see, it's dropping a bit. We have a PDRA that's a bit on top, but then we expect that. My main question was largely in regards to comparison of futures to CFDs, because for some of us, for example, when we try to run futures contracts, we are not able to do so because of geographical limitations. So it's largely to sort of identify how we have the differences between CFD interpretation to futures interpretation. Of course, I
So wait,
see that.
I don't understand what your question is, buddy. Again, you're talking a lot, and there is an asset, financial asset or instrument called a CFD. There's another called a futures. You're dealing with an individual broker, private broker, who's going to provide spreads. What's your question?
Yes, my question to Michael is largely when we're looking at CFDs and future contracts, how best can we do that separation? Largely, of course, we see that in the spread, but how best can we do that? I think it especially applies for the African context.
But what have you reviewed in the way of Michael's content? What have you reviewed in the way of core content?
Kitt, if I
Core
may.
content, I've looked at all the core content, and I largely have no concern there. I attended today's session, and the analysis was largely also aligned. I would just like maybe for Michael to speak to mostly.
I mean, I appreciate you want Michael to speak, but you can answer. Have you made money in the market before?
Yes, I have, Kitt.
Okay, so if you're a profitable trader, then I would like to implore you. What's the difference between a CFD and a future? Because you're asking Michael, and I don't understand where. I mean, you don't know the answer, or you just want to hear Michael talk?
No, I see the answer. I would largely just like to sort of have that sort of comfort to most especially the African traders, because there's that limitation when it comes to people in Africa.
Kitt, if I may.
Guys, I'm
Hello, Kit. Allow me to say a couple of things.
I don't really know if I really want all of this. This bombardment, it's not really it. I mean, guys, the market's going to be the market, and we're at weekly open, and no one is engaging with the assignment. So I love that Michael's here, but I also want everyone to listen. I am not going to sit here and waste my time listening to folks drool and drabble on about not following the program. If you want to come up here, then you have to follow the process. If you don't follow the process, I'm not going to stick around. You're not better than the process.
Okay, Kit. I want to. I'm from Kenya. My name is Dane. I saw your tweet last week about the commands that we're supposed to go back and follow, and
Yeah.
it actually caught me. The YouTube live caught me when I was going through month 4, and I was going through the information about the interest triad, But nonetheless, I had a very important question for Michael. And
Yeah, see, it's a very important question. I haven't heard a single question that has not been covered through a lecture. I'll give you the opportunity to ask it, but I will very quickly and abruptly interrupt you to stop wasting my and other people's time. Go ahead with your question.
my question to Michael was, how long do we have until doomsday? Because we are talking about preparing for doomsday.
Jesus, I love you, everybody, and this is not going to be the conversation we're having. Okay, I'll happily filter through all of this and tell you that's not what this is. Okay. So typically, this is why I ask that folks jump in my DMs so that I can screen you, so that I can save all of the folks' time and energy from it being wasted frivolously. And that's not what I, as a steward to your time and energy, is something I want us to do. Simply because you request a speaker tag, I am not obliged to give it to you, nor am I obliged to listen to your drabble on about nothing. Right? I'm not obliged. 2026 Denier, pretty please. Is that Vaginal Cowboy? Interesting name. I kind of like it. Vaginal Cowboy, you're up.
Yo, I don't want to waste too much time, so I'll be quick. First of all, thank you so much, Michael, for everything you've taught. I'm finally almost consistently profitable. It's the best feeling in the world. I love it so much. My question is there a way to determine whether price will simply IFED into a fair value gap, or to determine whether it's going to hit the consequent encroachment, the 50%, or a full fair value gap fill,
or order block core content month 4, episode 3, minute 12. You can look at where and how projections of order blocks are utilized, and where and how they will go 1 standard, 2 standard, or up to 3, and then where or how the OB is utilized, or the FEG. Minute 12, episode 3, month 4.
Okay, thank you so much.
You're welcome. Guys, order block projection theory, very clearly articulated by Michael in month 4, also pontificated and elaborated within episode 4, month 8. Month 8, episode 4. Okay. Keeping the conversation going, keeping it flowing, trying to get something interesting and compelling here. JJ, you're up, buddy.
Yep, sorry. My name's Jonathan. My name's JJ. Really, I've been trading for 6-7 years. A pivotal year for me. I got my first payout from Top Step.
Congratulations.
Thank you very much. Thank you very much. I'm also profitable for the first time this year in my live account. So I'm looking into talking to a CPA now this year. It's a very, very exciting year for me, this one.
Congratulations, buddy. How old are you? Where do you live? And what's your model look like? How do you engage with price?
Yes, sir. I'm currently 25 years old. I turned 26. I'm in Chicago, but my model is pretty much marking up initial liquidity at 7 a.m. and once I see a what's it called, the double purge, where like it goes up, where it purges the initial liquidity and then it purges that high one more time. That's usually where I'm entering.
Okay, so you like a double purge and revert.
Exactly. Yep. Exactly. Like during the macro specifically, and it's very, very powerful, super powerful.
I love that. I love that model. Did you get a chance to listen at all to anything today?
No, not yet. Just the last hour.
Did you have a question though? Maybe.
Oh yes. One time he said this one time in a video a while ago, where when he marks up the opening range of 9:30, which is the 30 minutes to 10, 9:30 to 10, and he says he only said this one time, where if the macros line up with the quadrants, it's more a higher probability. But the thing is, there are so many opening ranges, like the 12 a.m. opening range, the London opening, the 30
So when
minutes
you reference
after.
the quadrants, was he referring to time or price? When you say quadrants, quadrants are a referral to price, correct?
Yes, quadrants
Okay,
of
so
the
you
opening
just
range.
referenced macros, so I'm confused with where and how you're taking a time measure and referencing it to a key level on the y-axis.
Yeah, right. Just like he was saying with the last video with the multiplication axis. But with this one, he's using the opening range.
The multiplication axis. You're
Yeah,
when you say the x and the y-axis, right?
yeah. It's
That's
just
not a
how.
multiplication axis, by the way. X
Yeah,
is time, y is price, but continue.
it's just how my brain works. It's just how it's how I
But that
remember middle
I
school.
can't with good faith allow you to say something incorrectly to all of these folks. Okay, it's not a
Well,
multiplication table.
you know how it's like 9 times 9 is at 81, and then
Yes, sir.
you connect the 9,
And
and yeah, it's just how
okay,
my brain works. But
okay.
with him specifically, he meant the opening range quadrants and lining that up with the macros. That's what he meant. He only said this once.
The opening range quadrants.
Yeah.
Okay, so you're referencing putting a 4 standard on 1800 to 930. Is that what you're saying? Or are you saying
Basic.
the opening range 930 to 10 o'clock after that
Yeah.
forms?
Exactly. Yep. That exact range.
Okay. Okay. That 30-minute range, you're saying he's cited or referenced for you to put quarters on that.
Yeah, and he said it's higher probability when you align it with the macros as well. And I'm just trying to figure out how to refine that, because there's just so many opening ranges, and I just have so many lines on my chart when I put all those quadrants.
How many do you keep on your chart?
Opening ranges or quadrants? Because
What was your question anchored to? What's the focus of your question?
how to refine the macros and the opening range quadrants.
Okay, so the core focus is the opening ranges.
Yeah.
How many opening ranges, and what opening range are you referring to on your charts?
Well, you've spoken on many, but I guess specifically this one, the New York session.
So how many are you supposed to have on your chart?
Well, it's really relevant to where I'm at price, right?
True, but if you have the last 5,
Yeah.
I gave as a general
Yes.
rule of thumb, keep 5 on there. So if you're looking at the last 5, take the highest one out of the 5 and the lowest one. Now you have an entire grid there. Where are you at with market price? Then add the time aspect to it, and you'll be able to see where you're at in that range, discount the premium, look for liquidity, blend in the narrative. What do you think it's likely to do? Is it going to go higher or lower based on weekly chart, daily chart? And you'll see that the macro and opening range quadrant level within a context that's bullish or bearish. And let me ask you this. If you have a range of the last 5 opening ranges, and the range is encapsulating, let's say, 350 handles. It's probably more than that, but let's just say it's for the sake of just 350 handles. But you're in the lower 100 of that 350 range. So out of the highest last 5 opening ranges, regardless of whatever you want to use, it could be the first 30 minutes at 9:30 to 10 o'clock. It could be the pre-session opening range. It could be the PM session opening range. It doesn't matter. But you define that range or that price grid, and what you were referring to was the multiplication analogy, the analogy I was using as a multiplication table. So I think that's probably what
My bad.
you were implying earlier.
Yeah.
If you use that logic, you have to be able to determine a framework of how many you're going to look back with. So it's a very complex thing for a brand new trader to use this information because it's not found elsewhere. So you don't have a whole lot of work to go by except for you getting it in your own hands and collecting the data. So by looking at the last 5 opening ranges, the highest one, the highest high of that range, and the lowest low of the 5. Can you understand by what I'm saying that you have a complete maximum range by using the highest high and the lowest low of the last 5? You follow me so far?
Yeah, my mouth is open. Keep going.
Okay. So if assuming that we're in the lower 100 handles of that 350, are we in a discount or a premium relative to that?
Discount.
Okay. What do you think would happen if you are in a market environment where it's now likely to go higher? It's going to reach for a pool of liquidity that's within striking distance. And you're in a session where it's dropping down into a discount array relative to a time frame you're going to execute on during a macro time, and it's laying over top of one of the quadrant levels of the last 5 in that range that you've mapped out with the highest high and the lowest low last 5. What would you expect price to do?
I would expect there to be an exact fair value gap on that exact level.
And then do what?
And touch it, and then I just follow my plan. I'll just put the stop loss.
And what would you expect price to do if it did what you just said? What would it do?
I'll for sure react off of it. It would.
In what way?
Like a trampoline. Like, I mean, considering liquidity.
What direction?
Upward for sure. It would be a bullish.
Okay.
Yeah.
So now what I just given you is a way for you to go through and collect all the data in your own hands. So that way, I'm not going to give you a range of examples and look at this, look at this, look at this.
Yeah.
You will understand it more by what I just outlined here, all of you listening. And what you're doing is you're getting that grid I talk about, okay? And you'll be able to measure when it's a viable trade. Just because it's a macro time doesn't mean it's a time to take a trade. It doesn't equate to always doing something because there's a 20-minute interval where price can do something. It has to be something there to align a trade idea. It's just a timing mechanism. That's all it is. It's a timing. It's one aspect. The macro is not the answer to everything. It's just one key ingredient to help you focus in on a window of time where I want to be focusing my attention right now because things tend to happen. A move may begin there. A move may end there relative to time. But the more time you spend on the framework of a setup, that's where the majority of our time is. It's easy to get into a trade. It's very easy. You don't need the macro time to get in. You can use the macro time to say, okay, I missed the better entry because it was in the macro time. Everything's still germane to the market going higher or lower based on all the things I'm talking about here. So then I'll just look for a continuation institutional order flow entry drill or another fair value gap, or I'll buy a short-term little stop hunt on a lower time frame and then use that as a turtle soup entry. So I'm not certain I answered your question, but I used your question as a way of kind of like bringing the light. The question that keeps coming up is how many should I have and what am I supposed to do with it? You're using the highest high of a opening range and the lowest low of the lowest opening range of the last 5. Why 5? Because it's easy to manage. You can go back as far as 60 days once you get better with managing the data. But in the beginning, just 1 week's enough, okay? Slowly but surely segue into so that way you have the last 2 Mondays and Fridays in it as well. And then what you'll have is you'll have a dynamic range of price action that you can grid out, and that's your entire canvas to work in. You don't need to do anything outside of that range. You don't need to do anything outside of that. Everything you'd ever need to make money with is inside that. All the liquidity pools that you would look for, they're all inside that. All of the imbalances that it's germane for right now, they're inside of that. So you have a complete canvas where you can make whatever you want to make in terms of money, and you don't need to overanalyze anything. You don't have to keep more data than that. And it's just a revolving, every time a new day goes forward, tomorrow, then you would drop off one day and keep your records like that.
Yeah. Wow, man. A good teacher point. A good teacher points. A great student blazes the path, man. Thank you so much. I think that's enough homework for me.
Awesome. Thank you so much.
Thank you.
I feel pretty good because we were kind of trying to stiff arm some folks to try and make sure that when I mean, and then Michael comes and he dunks on everybody and brings some really, really good value for everybody. So, great question, awesome answer, and 26 Denis. Oh, we already spoke with you, Darian. Darian, you there?
What's up, man? Can you hear me?
Yes, sir. We can.
6:30. I like the time.
I like the time. What's
So I'm Darian. I'm 47. I live in South Florida. I'm a firefighter. I've been trading. I started learning right around COVID, and I found ICT. Michael, I was in a Discord and somebody brought up fair value gaps, and I was like, "Well, what's a fair value gap?" And they pointed me to the 2022 mentorship, and from there, it's like I just saw everything that he says. It's insane. Like I saw it, and like for me, I'm more of a why is this happening opposed to let's just guess, let's just buy it off the 20 EMA, or but why is it bouncing off that 20 EMA? It's because there's a fair value gap, or there's a volume imbalance, or there's something there that all these indicators. I was indicator based, and now I have nothing. So back to today's YouTube video. When Michael brought up World War III, I was literally talking to the guys at work the other day. I'm like, bro, this is World War III. This is it. What's happening? Like we're literally in it. Everybody's going to war.
It's
Now
kind of a sombering thought, if you want to know the truth. It's not anything that it's like, yay, I mean, unfortunately,
no, it sucks.
we predict the future, and I mean, I don't even want to get into the shit I'm predicting right now. But yeah, it's crazy, right?
Yeah, absolutely. I mean, I don't think it's going to be anything like World War II, where boots on the ground and billions of people dying. We have so much better technology now with air to ground stuff and our military and everything. So, do I think it's going to be that bad? I personally don't. I think the biggest thing is that no one's saying it, because if somebody came out and said, "Oh, we're in World War III," the market is going to completely tank, and everybody's going to go, everybody's going to get out. Everybody's going to panic, and it's going to be insane. So that's the only reason I feel like nobody said it yet. It's just.
I mean, I just want to add on the flip side of that, similar to COVID. I just want to add, just for what it's worth, where there are, and painting the bear story. I mean, the government propping up the market as they did in COVID is also a viable thing. I don't want to get into all of it. Again, I don't really want to be talking about opinion, but as we're talking about it potentially maybe going up, there could be some inexplicable reasons why, which wouldn't be inexplicable. It would be a funded initiative. But then if that were to happen, then if then statements would then, you would tend to think then that, a black swan, if we were to go higher, then unfortunately that's not good. Right.
Right.
Anyway, I don't want to get into my thoughts and opinions. I do in the live stream a little bit. I know, right? I don't. Now's not a time. Now's a time, in my opinion. Now's not a time to be as. I want to just observe personally. And I want you guys to talk, really.
So I actually have one question. So we're talking about the macros, right? 50-10. Like that's so. I'm sorry. You know what? I totally broke the rules. I'm Darian. I'm 47. I live in Fort Lauderdale. How I engage with price. I really enjoy the 2022 model. I wait for a sweep in liquidity, a reversal with some movement, and then get in on a fair value gap. I'm demo trading now. I'm not touching anything. As far as real money.
You're perfecting your craft. You're working on the technique.
Yeah,
good to hear. Thank you for the intro, Darian.
I'm retiring in like 10 years, so I have plenty of time, to learn and be proficient. So I'm not in any rush at this point. So my question was with the 50-10 macro, like, is there wiggle room as far as, because I've seen where we'll come into a fair value gap at 1045, and it's like, and it takes off from there. So I won't get into the trade because, or on paper, because it's like, all right, well, we're not in 1050, we're at 1045. So is there like a wiggle room for the macro, or is it like 1050? That's the rule. 1050 to 1110. That's it.
This is Michael's. These are questions directly from Michael.
They are very, very specific times. And because of all the hoopla that's going on, we've had a lot of things that would invite manual intervention, things that moves sometimes could start just before the macro. Sometimes it can happen just a little bit past the macro. I'm not usually participating in those because what would that indicate?
Manipulation.
There's somebody in there. Yeah, there's somebody in there. So I might read that wrong and get caught off on the wrong side. So I like to see the macro treat price as it
Respect
should.
it.
And yeah, because if it's not respecting a macro time, then what am I doing? I'm gambling. I'm
Correct.
guessing, and I'm not trying
Which
to do
is what
that.
I thought.
Yeah.
Okay. Awesome.
Hopefully, okay.
No, I 100% answered my question. That was where I'm at, because I'm like, I see it all the time now, especially after you said stop trading. You know, if you're not ready, stop trading. Just watch, tape read, you know, and that's all I've been doing. I haven't put any money. I mean, I have, you know, like my Roth IRA for like long-term stuff that, you know, but that's it. You know, nothing else. Everything is, you know, as far as the day trading goes, is just been on paper, you know, using the micro contracts and doing exactly what you said. And that's all I can do at this point, you know, until things calm down and we figure out a direction. That's pretty much it.
I think if folks would spend a little bit more time holding themselves to a rule-based idea around the most important central tenet to how and why prices move, it's time. So the least leeway given to time is the best way. So the more precise, the more adherence you have and apply to the time rules and aspects that you're trading, I think it'll be more forgiving to you than if you try to just say, well, you know,
it might work.
We all have done it. I've done it too.
Yeah.
You don't want to do that with time. Time aspects, it's kind of like it's either going to do it or it's not. So don't fancy dance around with it.
Awesome. Well, hey, I appreciate it, Fight Club. And Kitt, you do a great job with moderating this, bro. You crack me up every day. Somebody gets off topic and you just go off on them. It's the best. So I love you guys.
I want everyone to understand the difference between Darian, who has spoken with me in the DMs and comes up and follows the process and procedure, how easily that flows, versus the conversations where folks want to steamroll, say whatever they want, not follow what we're trying to do, right? So it's a lot easier with what we try and do when folks stay aligned with what we're trying to do. Maz King, you're up next, bro.
Thanks, Kitt.
Hey, what's up, Kitt? How are you?
Not much, G. How you doing? Thank you, Darian. And you're up, Maz King. I know you're excited to be here, my friend.
Yeah, I'm all good. Listen, I'm Jeff from Canada. I've been trading 4 years. Trading ICT concept, mostly breakers, session liquidity, SMTs. So that's about it for the presentation. I really like what Michael put out this year into 2026. Unfortunately, I got just like about half of the YouTube today, but I'm gonna get it tonight. Really like that Michael is saying that bring down the leverage, and in my book, that's also like inviting more of manual intervention right now with what we have. So with low leverage, you don't get RAM as much, so that's a good thing. I would have only one question for Michael, if that's possible. It's about new week opening gap or new day opening gap. I know you like to kind of grade your opening range by the amount of handles we have in the gap. Maybe I missed a video about that, but is there such thing about the size of a new week opening gap or new day opening gap telling us that bias will say we gap down, so we can take the bias like for the full week because the gap is like 100 handles or 125 handles or something like that? So that would be my question.
Did you watch the very specific lecture I have on new week opening gaps?
Which one would that be, Michael?
It's on my YouTube channel, New Week Opening Gap.
That's within core content, or?
No, it's an isolated lecture in and of itself.
Yeah, I'm sorry. I'm talking to a muted mic. That's going to be in core content 24, gap theory. And you're going to type up very specifically. There's 2 episodes, Maz King. One very specifically on the NWOG, and then another additional one on the NDOG. And you're going to be able to apply the gap theory, the gap concept from those two very specific episodes from 2024.
Okay, thanks. So then I will have to go and review those videos.
That's okay. And for what it's worth, what he's doing with Gap, if you can take 2026 builds on very specifically the Gap logic. So you want almost that as your precursor for a lot of what we're building on this year when we talk about core content. And I have purposefully reinforced and reiterated that within the DMs with a lot of folks, but it's not just that. We're dealing with range logic and gap logic. You're dealing with, I would say, even further than theory here. The idea of quote unquote gap theory, you're really just applying a specific logic, and that logic is going to afford you, Michael's mapping towards unrealized ranges and where and how those form, and where and how you might target towards one of those 15 very specific arrays that he references within gap theory. And it's up to you to go back and listen and find which one of those RTH gaps, NDOGs, or NWOGs that you're going to want to key to, because he tells you there's 5 of each.
No, that's fine. My question was basically about the size of it, right?
No, I understand.
Yeah.
I understand wholeheartedly. Wholeheartedly. But you're going to want to start with the gap theory and that very specifically. And then I would be looking at applying what he's been teaching right now. And if you were to grade anything with right now, you take your quarters and you make them eighths. That's what you do.
Yeah, that's what I do right now. Yeah.
All right.
All right. Thank you.
Hunting Wicks, what's going on, G? Hunting the Wick. Thank you,
Hi,
Maz King.
yes, I wasn't expecting to be called right away. Hi, everyone.
It's okay, buddy. You're up here. You've had some very good questions over the weeks, so I value and appreciate your thoughts. Did you get a chance to watch, maybe?
Yes, of course, I watch it. It was very instructive to see the multi-asset analysis. After that, he addresses a lot of things that I appreciated. However, my question are not really related to what Michael addressed during his stream tonight. Is that okay?
Yeah, I like how you even prefaced it, but you've had some pretty good questions. I don't think that'll be a problem.
Yes, of course. I mean, Michael, I really appreciate like the drill that Michael gave, like the challenge that he gave during this week. And also during one of those, I believe that was the fourth stream ago, he talked about like training in drawdown. And I really wonder if he had some drill. Hello?
Yes, I have more drills for you, but that one drill, that should be something, if you don't have anything to do, or if you don't know what you're looking for, instead of getting yourself in trouble with your funded account stuff or your live accounts, do some drill work with a demo with what we just did last week. You'll find that it's constructive. It'll keep you from losing real money if you're offside, and it entertains and it puts you in the marketplace where you're drilling for the experience aspect, not for the outcome to be positive. You're looking for following rules. You're looking for a systematic approach to doing something over and over and over again with pattern recognition. As far as the drill for drawdown or mitigating drawdown, that will come. I'll have something before the end of this month with that.
Great. I'm looking forward to it. But then, yes, I mean, that will be it, because I believe I will have another opportunity, and many other guys that want to ask some questions. So thank you for this answer. And,
yeah, that's great, buddy. That's great. Let's keep it going, keep it flowing. Seb, come on up here. Oh, Seb.
Thank you, Kitt. Thank you for coming. Thank you for letting me come on this one. So, can you hear me, first of all?
Yes, sir, we can.
Thank you, man. So, my name is Sebastian. I'm 27 years old from Romania. I'm trying to get my constant profits. I had some, like in September and October, But firstly, let me tell you how I engage with price. I'm much of a fan of the smart money reversal for I was until October, but then it kind of clicked for me that the weak theories, all of this stuff, it's more advanced, and I should engage more with those ones specifically. I have watched the today's lecture, and my bias was exactly how Mr. Michael was having it. So thank you so much for that confirmation, I can tell. And for the question, I'm not entirely sure about the RTH gaps. Let me just give me a moment to phrase my question. I know that we should save like 5 to let's say we have to have like the last 5 trading days, and also maybe use the other Monday and other Friday. I'm sure Michael taught us that at least. But my question in here regarding this one, how much longer we should leave an RTH open range gap on our charts? I'm doing them as an like on the object tree. I am not having them on all time because it's like a lipstick, how Michael is telling us. So I'm trying to put them on and off sometimes, but I'm not entirely sure how
That's a
much.
good. I mean, that's a good question,
Hmm.
Seb. That's a good question,
Hmm.
Michael. I mean, I think he's asking a great question.
Like, if we traded for at least 1 to 2 times on a specific RTH gap, we should have that on and just have it as a reference point for future prices delivery.
If I understand your question correctly, correct me if I'm
Mhm.
wrong, but this is how I'm interpreting what you're saying. If we use a previous regular trading hours opening range gap, if we use it several times, do we lose any significance placed on that one and then therefore use another one in its place or remove it from our charts? Is that what you're
Yeah,
saying?
correctly.
Okay, no. Just simply, if it's part of the last 5, it stays in rotation
Hmm.
because it's gonna use it again. If price is going to go higher or lower in there and it's going to traverse to that and through it, it's going to use those levels again.
I see.
So don't think that there's an expiration date on them. Like if it's in the rotation of the last 5 days, consider them fresh levels. Okay, even if they use them lots of times, it's still going to be salient to real time, right now price action.
I understood, sir. Yep. I think that was my initial thought on it, but I just wanted to make sure.
No, that's a great question, Seb. I really like that question. I think with that's very salient to what Michael's teaching in 2026, and I know that is a common question that other people have. So, good job. I think you did a great job in asking it. And Michael's answer for folks, just to reiterate, it's like a ladder. You got 5 days, and it's going to be good no matter what. Those prices and those price ranges matter for the 5 days, and I think Michael's saying you kind of keep them for a rolling 5. Right?
Hmm. I mean, I have like different from like even 10
Yeah,
to
you've
15.
got some old ones up, right?
Hmm. Exactly. But
Okay.
just to make sure. Thank you, Kit. And that was my question.
How many markets do you trade? How many markets are you trading, and how many markets are you placing the information on?
I'm just using on the NQ. Mm.
Okay, good. Because a lot of times I get a lot of folks leaving comments saying, I have all these levels on my chart and I'm doing YM, ES, and NQ, and I want gold and I want to keep it on silver now. And it's like, okay, stop.
No.
If you just worry about one market right now and following one set of guidelines and rules, everything is transferable. You can go to anything, and if you want to add more markets, that's fine. But you first have to learn the skill set of managing the data. And that way, you also, by doing this, you'll see that they don't expire just because it's used it several times. If it's still in the rotation of the last 5 days and it trades in close proximity to it, you'll see them using the octants, the 16ths, the quarters, every high and low it's inside there, the consequent encroachment, everything will be utilized in that range because it's a callback reference point. It's an array that the algorithm will reach for because it's based on time and price. So it has to be able to call back to a reference point. And how does it do it? Over a period of time and to a specific price point. And where's it going to get this random level from? It has to be something that it's using to build the context of why it needs to refer back to that price level. It has nothing to do with buying and selling, how many orders were bought or sold at a specific price level. If people would just simply suspend their disbelief and just go through the motions of doing this exercise for a couple months, you will see there is no advantage in knowing how many candlesticks, how many orders were bought or sold inside of a candlestick's range. You don't need that. I'm going to tell you with this logic, I'm going to show you exactly where these orders are going to be the largest. And you'll also see where, if you're a volume profile kind of guy, I will tell you where the lowest volume nodes will be and where the highest volume nodes will be. And by understanding this, you'll know what the real point of control is. And it's not that level you're seeing with volume profile. But just simply me saying it and simply me using it with real executions, using it with stop management and doing things that nobody else is out there doing. Nobody out there does stop loss placement like me. Nobody does stop loss management like me. And it's based on what we're talking about here. Using these ideas, using these levels, specifically the things that I'm talking about will promote this understanding that just put down everything else. You don't have to subscribe to this for the rest of your life, but just test it. Just test and see what it looks like in your own hands. I promise you, you're going to get something that you didn't expect to find by doing it. And you'll see also that just simply because it used these levels in the past several different times, they don't expire. If it's in close proximity to that, in the last 60 days, it will use it. Now, the question is going to be wow, in the last 60 days, good grief, there's so many that could be there. Right, there could be. But which ones are you using with the current market structure that's in play? Are you in a part of a market maker buy model or sell model? If you are, okay, there's a opening range that's 59 days ago. That's still in the right range, but is it part of the market maker model that you're looking at price action in right now? No. So why are you worried about it? You wouldn't be. So this concern is, the argument is posed by many people that simply, it's the first sign that you haven't done it. You haven't done any work with it because you're saying, I'm not saying you, I'm saying hypothetically, but I get it a lot by email, I get it a lot by comments and people posting things to me on X. They'll say, well, how do I get over this? Because what you're looking for is a perfect excuse why not to ever do it, because it's going to require some effort and hard work on your part to be organized. And that's the biggest telltale sign that you're going to never make it as a trader. You're lazy if you don't want to do this. You're not going to appreciate the level of insight that it gives you because it takes effort. It takes organization. It takes a concern for managing your focus, deciding where you're at in the market structure right now. And because so many people want the easy way in, they want to just give me something that's going to make me money right now. And I don't have to think about it so much. I'm not the guy for you. I'm not that guy. I'm the guy that's going to tell you exactly to the tick it's going to go to, what time it's going to start, and when it's going to end. That's not going to be a 1, 2, 3 easy recipe. It's not going to be like that. If I had a way of doing it, that way, I would have shared it. I would have saved myself a whole lot of grief, I wouldn't be here on a Sunday talking to y'all because I would have been, here he is. Here's a 5-minute video. Just do these 5 steps and never do anything else. But it's just not possible to do that. Not to be this precise with it. No, it can't happen.
Less is more. Like,
that's right.
You know.
But to your point though, Michael, the successful traders who are able to successfully trade follow process and procedure. It's really hard. And you've grown up within software. And it's funny when we get to talk, I get to talk with a lot of different people, but when you see folks, developers, JadeCap is a great example, someone who worked in construction. I worked in construction, right? That's where I come from. But software development and construction development are very similar with trading because they require a process. And that process
An operating procedure.
is a procedure, right? And what most folks are what's foreign is these processes and these procedures. And it's funny to me that we lay out processes and procedures even for the protocol within how to communicate with their mentor, their idol, and folks come up here and just steamroll and don't even do that. Like if you're provided a schematic, a rule set, which Michael's entire career has done very, very, very well. And as someone, again, I'm an engineer, but I look at things the same way in which Michael has presented them. And that is a very clear process and procedure, a schematic. And you need to be able to look at things within a design. A design has a schematic, and then it follows a process and a procedure. If you, the trader, are capable of aligning to the schematic, which can also be to scale, which the markets are beautiful that way because an architectural blueprint that I build and cost is the exact same thing I look at on a chart. So when we look at scale and measurement and projections and why I'm so good at it and why someone like JadeCap would be good at it, why Dom, a candlestick stalker, would be good at it, someone who works in estimating and construction, again, I can talk from this regard. Engineered drawings are very similar, scale similarly to what we look at within the financial markets. And what eludes so many traders is their inability to conceptualize process and procedure.
Getting started doing it is the biggest obstacle because it's a whole lot of questions that you're afraid that you're going to do all this work and it's not going to be fruitful in your own hands. And I've seen so many individuals from different walks of life basically give me an invitation to talk them out of doing it. That's what they want. They want to hear some buzzword that's going to say, okay, that's going to require too much effort. I'm just going to stick to something else. Or this is going to be easier than I thought it was, so therefore I'm going to do it. And if you notice, I don't do either side. I just say, this is what it is, and you're either going to do it or you're not. And if you don't want to do it, that's fine, but you're not going to get the precision that's available if you do these things.
That is the beauty of the entire work of Michael on YouTube, his YouTube channel. Why I have been proclaiming for years that it is an academic opportunity for the user, because you can literally follow a schematic, you can follow a plan, you can follow a process and a procedure. And I am somebody, and folks within the community know, I have championed core content. Core content for me is an entire manual, a training manual for which I can then engage with anything and everything that Michael talks about and teaches. And within the community, and what I believe is extremely important, and what Michael has also reiterated, is core content is foundation. So us within the community, we really want to adhere to and follow the foundational principles, the foundational processes, the foundational operating procedures that have been laid out. And we're talking about market mechanics, not just someone's ideas. We're talking about things that are what they are, and they're defined by what they are. Uh-oh. Did we lose Michael? Probably
No, he's
probably
still
connection.
listening. He's still listening.
No, yeah, but no, probably power down, power up, connection issue, whatever. He typically doesn't fall off like that. So whatever, I'm not worried. There he is. Again, I already know it's power down, power up. But
If I can,
circling back around,
sorry,
Seb, please continue your point.
I'm so sorry for interrupting you.
No
but speaking
interruption.
on the blueprint perspective, I said like in September and in October. So I have been trading for like almost 2 to 3 years, and like everyone started, I went to the support and resistance. Then I found Michael, which then immediately clicked with me, and I stopped watching everything that had anything with the retails and everything. So in September and October specifically, I have managed to do like 3K in payouts. But after that, I thought like, okay, I'm the market maker. I'm gonna destroy this market, and
Oh,
I
you got
have
a little. You got your ego got in the way, huh?
exactly. So I could uh, give a book, maybe "The Ego Is Your Enemy,"
Yeah.
for everyone that is listening. I'm not sure if I have it, so I don't have the author remembered, but it's a great book to for us to.
Post it on your page or add it in the comments, buddy. We'll retweet it, or some folks can like it and stuff.
Yeah. So after that, I have tried to buy many accounts and I blew them. I mean, I was passing the evals, but when I was getting to the funding stage, like when I had to be more thoughtful, more careful, then the ego, as you said, the impatience, the all of the things that came into
It's
my brain.
inexperience,
Yeah,
and I will
exactly.
tell you, even as good as you get, you're going to come across inexperience, which
Yeah,
is why Michael and why the community is good, because we can help convey what you might not have an experience. That doesn't mean you can't learn. It doesn't mean that learning experience might not sting, or it might be difficult or even costly, but the chance or likelihood that you learn, or learn faster, or learn sooner, that's why we're here. And being able, you can lean on experience. You still need your own. And within these markets, the most treasured thing, and it's been talked about by Michael often, is it's your journal, and your journal is your experience.
yeah. So now I'm pretty much scared, and I have like almost 170 BPMs whenever I'm taking a trade, even if it's a good trade, like it's my A plus setup as we call
Yeah,
it,
well,
or
that's detaching from the market. And
exactly.
what did we talk about? And Michael's done this as well. You being able to, I mean, for you to be able to trade demo is you really dealing with your emotions, with disengaging with everything and really engaging with the price. I can tell you, as someone within the community who has also struggled with emotions, who has also struggled with a lot of these things, just like what you're saying right now, the disengage from the outcome, focus on the process.
Yeah,
And that is you really tapping into the 2026 mentorship. What's happening right now? Why does the 2026 mentorship matter? Because of the existing market conditions right now. You're not going to get World War III in the core content.
of
Okay.
course, and the
No,
seasonal tendencies
I
and
know,
everything.
but it's very important that you build foundations within the language, within the logic, within the schematics, within the processes and the procedures. Because when we refer to price action charter model 5, and when we refer to core content month 8, then you should understand that we're talking about standard deviations and projections, and what you can do from a time-based range or an order block with projections.
Yep, I use standard deviations a lot, and I have like a second screen where I have my couple standard deviations for. Uh, uh,
Can I give everybody a hint here? Your mentor is really big in 8. Okay, so when your mentor's birthday is 8/8 and he gives you a fib that's eighths, you already have everything at your fingertips. Everything.
well, I think Michael retweeted some time ago my response.
Oh,
Uh,
really?
like I'm exactly born on 8th of August, so
Oh, you guys
it
have the
really
same
clicked
birthday. FX for
exactly.
living. Michael, I thought I knew it. We have a few Leos in here, and 8's a number of abundance, but I'll tell you, 8's a really good number in the market. And when we think of time and price, and if Michael is going to show you, again, you've got quarters and then 8's, you can live on that. You can really feel good about those within your grid, within your PD array matrix that you're learning in 2026 of how to apply the understanding of things that you're learning from core content month 4.
Can I ask a question?
Yes, sir.
I believe I heard him say, and it was very hard to, because his language barrier, it might be my problem, not his, but was I hearing you say that right now you're scared and you have an elevated heart rate when you're taking a trade now?
Every time.
Okay. If I could have a minute or two to kind of like address that, because
I would love that.
There's no way that you're going to fix that by trading your funded account or a live account. It doesn't get fixed by that. Okay. The only way that that's corrected is you have to take yourself away from the monetized outcome. You have to go back to first tape reading. That means no demo either. Go back to ground zero to say, okay, what am I doing? Like, what am I looking for? And study, are you keying up on things that are animations in price action and you chase that? Or are you predicting your model and jumping ahead of your model before the model actually gives you your setup? Are you able to follow a model? And you find that out by not even demo trading, you're tape reading. And if you're sticking to the rules there and you're confidently finding feedback that's supportive and you're not sugarcoating it, you're not pretending that you didn't just see yourself do some silly stuff by saying, well, let me think what would happen if it did this, that. No, what would your model be? You're not entering a demo trade. You're not even doing anything like that at all. But are you studying with that logic of that model while tape reading, expecting price to react a certain way? And when you see the feedback that's immediate by watching live price action, what you're doing is it's counseling your subconscious. You're recalibrating yourself and taking your focus away from the monetized outcome of a trade. Once you get into that hypersensitive realm of now everything's scared, like scared money doesn't make any money. It can't make money. The only thing it does is lose money efficiently, quickly, with no obstacle or barrier. It just fast tracks it right out of your account and then regret. So the only thing you can do, and this is the only thing you can do, if you're going to stay trading, that is, otherwise quit. But if you are consciously wanting to fix this and ground yourself, you got to take yourself out of the money. You got to take yourself out of the pursuit of funded account challenges and trying to get a payout. Take all that stuff away. Go right back to the beginning of just simply tape reading. Do that for a couple weeks. 2 weeks is all you need to do it. Then 2 weeks of demo. Yes, you're giving up a whole month, but that whole month is like going away to a retreat. You're in a counseling, you're in rehab because you've messed yourself up bad. You've scared yourself. Now you don't even trust anything's going to make any money, but you see things happening. What's happening? You are not following a model. You've lost the plot. You're so worried about the outcome, and you're caught up with this cycle that's vicious. Like, I want to make money, but I'm afraid to do anything. And then you see the price run, and you say, I knew that was going to do that. Why that? Now you're beating yourself up because you didn't take any action on something that you really didn't watch happen. You just see it in hindsight, and because you're so keyed up, you're having these moments of deja vu, which makes you think you've done this before. But really what's happening is you're so anxious or you're so excited. Either environment does this. Your brain sees something, it saves it right back into your brain and plays it back as a memory instantaneously. And that's why you get that deja vu feeling. That's how fast and powerful our minds are. You're inviting those things to torture yourself. So the only way you get yourself out of that loop is to take the money away from it, take the social media away from it, take the whole desire of watching my new content away from it, go back to what was your model, and then go tape read it for 2 weeks. No demo entries, no sugarcoating what you're doing. Can you follow those rule-based ideas with that model and just watch price action and say, okay, it should react like this right now. And let's see where it goes, if it can go up to that point or go down to that point. That's how you do simple tape reading. You do that for 2 weeks. And then you do the actual demo entries using that model. If you can't follow the model, just doing a tape reading, then you add another week to it until you can. Don't skip over it and say, well, I can't do it there, but I just might as well jump back in there and start making money and try to make money because this is a waste of time. No, it's a waste of your money doing it because you're going to lose money again. You're not learning how to do this correctly when you do that. You're not learning how to be a independent thinker that's focused on preserving capital and making money following a model. 99% of people out there that have all this lip service off their account, they want to correct people, talk to people how they should do this and how to do that. They don't make money. They have no idea how to correct problems when it comes up like this. They haven't even been trading long enough to encounter the large portion of barriers that's going to come up because they haven't traded with real money. And if they made money with a funded account, that's not the same thing as you putting your hard-earned capital in there. Because what's the difference between that and your hard-earned capital? If you lose your hard-earned capital, it ain't $60 with an affiliate code to reset and get a six-figure account. You got to have six figures or you got nothing. So it's not the same. We're not on the same playing field. When you're playing with real money and a funded account, you can have 50 accounts across every funded account company out there. You are still playing with fuck nothing. Piece of shit nothing. It's nothing. It's a whole bunch of spitballs. They don't do anything for you. But when you have real money in an account, $10,000 of real money is more than all the six-figure trading account company guys out there with these funded accounts. You still got more money than them. You have more money than them. But they get latched onto this idea, I'm a six-figure trader, I'm a seven-figure trader. You're nothing. You're a demo trader. You bought a demo account. You're trying to beat rule-based ideas that are above what's expected to be profitable in a regular trading cash account. So the way you fix that fear is you have to take a step away from, okay, the markets are going to be there when I'm done doing this. I have to calm myself down. The only way you can calm yourself down is to remove yourself from the stimuli. What's the stimuli? The pursuit of money. The pursuit of money now is blinded. You have the fog of war right now. You can't see what you're supposed to do. You're shell-shocked. Everything you're doing, you're second-guessing. And everything that's moving, you swore up and down, you knew that was going to happen. You can't make sound decisions when you're like that. Nobody's going to correct it for you. There's no other mentor out there that's going to give you a different way of doing it. There's only one solution. You have to stop doing the executions, seeking the outcome being monetized. You won't fear the outcome when it's not monetized. You go right back to what is the purpose of doing this at all? Is the logic sound? Because you can't trust the logic anymore. You can say it with words, saying, yeah, I really love the model. I love what ICT does, and I love this, and I love that. If you love it, you'll follow it and stick to it. But you can't do that right now because you're scared. And that's a normal thing. Everybody will go through it eventually. Everybody will go through that eventually. The people that are going to be in this business for a long time and be consistently profitable and carve out a living and a career from it will understand that the only way you fix that is go back to the beginning when you're not even pressing an execution, get in and get out, not even on a demo. You got to go back to tape reading and remind yourself, what is it you're doing? What is it you're focusing on? What is the model? Because if you can't do it in that situation where there's nothing at risk, what makes you think you're going to do it with real money or with a funded account where you could potentially get a payout if you jump through their hoops? Nothing. And that's the facade that the trading industry taps into. These funded account companies, they tap into that desire to jump ahead of steps to get me the payout, because you think the payout is going to be the reward for you to continue doing this. When right now you've now created a toxicity that there's no escaping that going forward from where you're at right now. It's got to be retreat and regroup. Does that make sense?
100%, man. I mean, you are speaking directly to my soul, and I'm just, when I'm running, when I'm doing anything, I'm just listening to motivational sounds or clips of you, and it feels like exactly one of those. But
it's not wasted
I
time.
get what you.
It's not. By doing this, you're not wasting your time. You are investing in yourself. You're calming yourself down. You have to calm down. If you don't calm yourself down, you can't think clearly. If you can't think clearly, you can't trade effectively. You can't trade effectively, you can't profit consistently. So I hope that helps.
100%. I mean, I was using only the funded because, like I said, I'm from Romania, so I don't have a lot of capital. But I think it's the best that I don't have a lot of capital right now, because I would have done exactly the mistakes that I have done with the fundeds. But I will get this, man. And yeah, I mean, I'll let anyone have anything else to.
No, I
Well,
mean, I
yeah.
just want to add real quick, Seb, what you're
Yep.
saying and what Michael has said. For one, he's echoed this throughout each year of his mentorship, and it's almost been a pre-qualifier for folks. It's like you need to understand that you need to be in demo. And I want to, on Front Street, I want to say, I mean, I've hurt myself in the market, right? And the only way that you can heal, the only way that you can repair is through tape reading. And it's going to start through tape reading, as Michael clearly defined, and then you're going to do demo. But it's going to start with tape reading first, because you have to disassociate yourself completely with what the outcome is. And you have to simply rely on your analysis to predict what's going to happen before it happens. Because us as traders, that's what we're doing as speculators. And if you're an ICT-based trader, you're doing this fractally. So that's just what it is. And I too many people rush too quickly into capital and even into ways in which they can hurt themselves. And instead of realizing that all you're doing is lengthening, you're pushing it further, you're making it more difficult. All you have to do is follow the process. The process is you need to do this in a very safe environment, and it needs to be academic. And if you can put yourself in an academic environment where this is safe and where you can really, really hustle and grind, I mean, the optimal traders that I know are learning and working at the same time. You're able to somehow conceptualize and learn and get paid. Now, that's
I'm
not
doing
everybody.
exactly the same thing. So,
That's
but
what you want, right?
I will truly get this, and I will get as much as get back to the space once it gets finished, and I will listen again and again, and maybe that will definitely help me. So, it's
Again, I just want to reiterate for everybody how important what Michael is saying is. And that's the best way for you to thrive in the markets is for you to take off all of the baggage and for you to simply apply your intuition to the knowledge and the concepts that you've poured yourself over. So the idea is to pour yourself over the content, the YouTube channel, which is free, and you have literally a Ivy League professor within the markets who's donating his time and energy to you, the student, and it's because it's a global audience and he loves you guys so much, right? So the students of this Ivy League kind of professor towards market mechanics and market movements that provides an entire body of work on YouTube. Let me just reiterate this very quickly. What's the difference between you, the trader, in year one and you, the trader, in year 10? I will tell you, it will
wow.
be 10 different years of you experiencing the market. Now, as you're learning, what do you get to do on Michael's channel? You get to experience different years within the market, within your own learning. So clearly, core content is going over concepts that were relevant and pictures and charts that were relevant in 16 and 17, but yet somehow they're salient and relevant in 2024 and 2025 and 2026. But more importantly, each year's market condition is going to be slightly different. And you, the student, get to pour yourself into that if that's your thing. The most important thing is right now. That's the most important thing right now.
I can say I can read Michael's videos, but I'm lacking on psychology more or less. But it's just because I'm not detached
You're
to the
wounded. No,
money.
you're wounded. You're
Yeah,
just wounded,
and
brother. And that's what you've heard. You're wounded and you need time to heal. And time to heal comes through tape reading. And honestly, saying 2 weeks is prescriptive, but in reality, I can tell you, you could be more damaged and you could need more time to heal. And you need to be prepared to allow yourself time.
The more time you put it off, the more scar tissue you form, and it's harder to break that bad habit you've created for yourself.
Yeah. And as you said, whatever goal you have, it will take mostly longer than you think. So be patient with it and it will come through, I guess.
Working harder when you don't know what you're doing pushes your success further away and almost to impossibility.
Which is why trading requires a mentor, which is why we have Michael, because within just the journey, that experience helps the person on their journey. You need that help in order to succeed. Folks that pretend like you are better than, it'd be like me pretending that I was some elite athlete that never needed a coach, that never was I was too good in game time to ever focus on technique and practice. These are like rules, like gravity. These are things that are like, they're foundational principles to succeed that you see in organizations, that you see in universities, that you see within Michael's YouTube channel. And what's funny is, and again, lots of folks from different parts of the world don't realize the level of information that you have. And I mean, Michael put it out, I would say, very intuitively with a lot of what he did, with also very thoughtfully. And then it lives there. And now you get to come through and decide where and what you're going to sharpen yourself on. And I'm going to tell you the core content. I'm the guy that's going to tell you core content is what you need. And I will exude that through being here. And then you can learn everything from Michael real time, right? That's
In
what
the
it is.
meantime, sorry, Kitt.
Go ahead, G.
I found the author of the book that I was talking earlier. So it's Ryan Holiday, or let me get the cover undone. So The Enemy is the Ego by Ryan Holiday, and something. I have a cover from my book, so I'm not entirely sure.
Beautiful. Hey, Seb, I want to get to a few more folks here.
I'm sorry.
No biggie. I'm going to get to a few more folks here real quick. Michael, how much time do we have? Just checking in.
Have a good one, guys, and God bless every
you as
part
well
of the community and your kids.
God bless, Seb.
8 o'clock, I'm signing off.
Yes, sir. I like the time.
I like the time.
The tape reader, the professor, you're up, buddy.
What's up, guys? How's it going?
Pretty good, G. How are you?
Good. I'm just gonna introduce myself first. So my name's Omar. I'm 18 years old. I've been studying Michael's content for about a year and a half. I've gone through all of his content, core content, 2022, 2023, 2024, 2025, and now 2026. And my favorite is, to be honest, the 2024 mentorship, because he I don't know, I love the motivation in that mentorship. He kind of yells at us sometimes, kind of gets very deep.
There's some tough love in that one.
I know.
There's some dad energy in 2024, boy.
I love that one. That's my favorite one. I don't know. I love when he has that anger in him. I don't know. It just motivates me a lot. But yeah, I know that 2024 was my favorite one, and it actually solved a lot of issues in my trading. In that I was so focused on the model, and the 2024 mentorship really focuses on drawn liquidity, which is, smooth edges tend to become jagged. I don't know. I love that quote so much because it's so true. And once I started implementing that, like, the most important aspect was drawn liquidity, my trading improved by so much. And that's what really changed my trading. And I also had a question about when we're talking about gradient levels. Because first we introduced the quadrants of like fourths, and now that we're getting into the eighths, like how higher does it go? Does it go to 16s, 24s, 32s? I'm just interested in that.
It does depend upon the range.
Okay.
The
And
larger the range, the more you can define it into smaller increments. But what you have right now is enough. Like you didn't need anything less than the quarter. So I mean, it's upper lower quadrant and the consequent encroachment in the high and low. That's enough. That's enough.
yeah.
But when there's a large, huge range, like a new week opening gap, it affords you even more levels. But when the range isn't so big, when it's a disparity between 4.5 handles, 5 handles, just simply because there's another level available to you, it loses its effectiveness. It's a diminishing return, so you don't have to worry about having it there. But the larger the range or inefficiencies you're measuring, then the smaller degree, it's available to you.
Yeah. Okay. And I I don't know. I love seeing this is when we have smooth edges in price. Let's say, for example, we have relatively equal highs, and then we also have a macro time coming in, because that's what I noticed about journaling is because I never understood when he used to say the importance of journaling. I used to I'd be like, what's the point of this? And then I've actually started taking it very seriously, journaling all my trades at the start of September, like literally taking pictures of the AM session and PM session, and you really notice like how important journaling is, because when you talk about time, you notice that during the macros is when the spooling events begin, the turning points in the marketplace, and it's pretty crazy. And when we have time and alignment, and we have smooth edges with also a gradients level and price, like a PD array, it's absolutely fascinating of how we
What was
can
one of the things that you noticed about yourself when you started journaling? Not right away, but since you have been journaling, what type of thing have you noticed about yourself? A positive thing that you noticed about yourself, or a negative thing that you noticed about yourself?
To be honest, I noticed one of the negatives was the reason why I would blow accounts is because, like, it's actually pretty crazy what journaling does to you. You find your problems, and my problem was I would sometimes I'd be very scared to enter a trade, but it would be the right draw on liquidity, and then I would chase it until we're a couple handles away, and I would put so much size on. And what that would do is a little retracement would take me out, and I would blow the account. That was the one problem, and why I would keep blowing accounts. And then I just once you solve the problem, it's how these markets really work, and you fix your problem, and it's pretty crazy.
You said it correctly. I wanted to hear you say what you said. Journaling highlights our shortcomings as humans. It gives us the magnifying glass right over top the problems that we're pretending don't exist. When you're journaling, whether you write it in that journal or not, it came up in your mind. The emotions of what you're doing, what you're fearful of. I need to be profitable. I need to make money. I need to be able to show this guy on social media because he's calling me a fraud. He's saying the ICT concepts don't work, and I got to come out and prove something tomorrow, because if I can't do that, then why am I wasting my time with this? All these internal wrestling matches, okay? What you're disciplining yourself to do is acknowledge that you feel them when they come up, but don't fall prey to them. You're not a slave to that. That's toxic thinking. So what you're doing is you're choosing. Just like when you have a model, you're not choosing to gamble. You're not choosing just that, well, I got time to be in front of the charts, so let's push the button, finding out what happens. We don't do FAFO model around here. We simply go in with a model that tells us this is what I expect price to do, and if it meets all the criteria that I have within my reasonable short list of things that comprises my model, then I will engage it. I'll put my stop loss where my model says it should. I'll only risk 1 micro because I'm brand new at this. I haven't been doing it long enough. And I'm conditioning myself to follow the model with real money eventually. Okay, but not in the beginning. But what you said is exactly what I was hoping to hear as an educator, because journaling gets a bad rap right now. And because everybody's tapping into people's desire to do something right now. Funding account companies, they tap into that. The influencers, they tap into that. Here's my giveaways for today. Everybody just dog piles in. They want to get their giveaway. They don't give a shit what they're talking about. They don't care about their trades. Is it time to give away? Did you do a giveaway yet? So really, they're not there to do anything except for get a freebie. So they're wasting their time, all that time wasting just to get something for free. When if they just did the right things, they won't need to get a freebie. They can just know for certain they have a model that works in their hands. They go in, they have one micro. One micro can replace their fucking job. They don't understand that because they haven't done the math. They haven't gone through the process of showing themselves the logic by journaling. This is what works. This is what I'm thinking about while I'm learning. So these are problem areas. These are wonderful things for me to say, you know what? I don't need to carry the concern of being right all the time. When I'm journaling, I feel like I should be writing that I didn't see that coming today. And I feel bad about that. And I feel like I'm second guessing myself. Well, what does it highlight? It highlights that you're brand new and you're feeling exactly what you should be feeling as a brand new trader. Someone that's learning how to do this. And remind yourself that it's normal to feel that way. Remember, you're having a private conversation with your future self. Your future self. Would you want to have a conversation with someone that the highest degree of respect, you look up to that person? Would you want to have the first few minutes of the conversation with, hey, asshole, I ain't seen you in public long enough to be able to come up to you and tell you, you're a real piece of shit, pal. I've used things to learn from you, but you're a piece of shit. Would you start that conversation like that? Hell no. That person would be like, get the hell away from me and broom you away. But you think this way in the beginning as a trader about yourself. You're toxic. You think about all the wrong things. You worry about the most insignificant things that have the least importance of your outcome in terms of success. You elevate all the things that are minute in importance, and you overlook the things that are most important. And the journaling aspect, it helps you zone in on those things, so it helps you calibrate and correct yourself. But if you're not going to do it appropriately, if you're not going to be honest with it and say, okay, these are problem areas, but then you lace it with positive self-talk. I am impatient. That's the first thing that's going to come up in your mind. I don't want to write that in my journal because Michael said don't do that because it's toxic. So how would you do that? You would say, okay, I'm feeling the cause and effect of my infancy as a trader in development, and I can see this insatiable desire to want to do more than it's necessary and do it before the model's indicating I should. And I'm learning steps to mitigate that impatience in action. See the difference there? You're addressing it, but you're not beating yourself up about it. So that way, when you go back and read that journal entry, you're not going to say, wow, I didn't beat myself up there, but I was aware of it there. And I gave myself a reassuring remark that builds me up, but still identifying a problem where I need to focus and work on that. I just wanted to make sure that you were reinforced, because in case they didn't pick it up listening, that's exactly what journaling's for. And the people that say don't journal, it's a waste of fucking time, I guarantee you they're fucking broke. I guarantee you they are fucking broke.
Yeah, that's so true. People, it's crazy because I used to say, like, what's the point of journaling? But I found my problems, and my problems are, you will find your problems by journaling, and the very simple, very easy mistakes to fix. And journaling does do a lot. So I just wanted to say that.
I'm really glad to hear that, buddy. And being 18 years old, being a younger trader, coming through and, learning as you are, you're learning the correct way. You're doing the correct things. So kudos to you. High five. I like that you're able to come up, and I thought that was a really, really good point. Good conversation.
Yeah, I know. I just want to say thank you guys for everything, and I do have a little funny story. I'm gonna make it real quick, but yeah.
Yeah, dude, come on, go ahead.
As
Go ahead.
I was in, because I started learning Michael's content when I was in grade 12, at the beginning of grade 12, and I still remember the exact day when I first started to take this stuff serious. I asked myself, I'm like, do I really want to stick to the average lifestyle? Like go get a job and do like the, as cringy as it sounds, it's true though. It's pretty sad, the average lifestyle. And once I really took into this, I went all in, and I even told when I was done grade 12, I even told my parents that I'm taking online classes for college, because I really thought I could make this work, and so far I made the right choice. So I just want to say thank you, Michael, for everything.
Keep plugging at it, you'll get it.
All right, thank you guys. See ya.
Peter, come on up, buddy.
Yeah, thank you, Kitt. I just wanted to say it was a great, the last 10, 15 minutes, the talk about the journaling is that's so important. I just want to add on it a little bit, because when I started journaling, it was a little bit overwhelming, because I immediately started to write everything down. And I just wanted to encourage everybody here, if you're starting with journaling, don't pressure yourself in writing like full pages of everything. Because then the entry barrier is very big. If you do it once, that's okay, but then it takes a lot of effort to convince yourself to journal again and again and again. So what helped me was basically just to write 1 or 2 sentences in the beginning, just to get me into the habit. And after a couple of weeks, it was sort of a little bit more natural, and then I started to write more and more down. So don't be afraid of the effort initially. Try to lower the bar as much as possible. Even if you write 1 or 2 sentences, that's initially all you have to do to get into the habit. And once you're into the habit, you can really beef it up and write down much more. So yeah, just my 2 cents on that topic. It was a very good conversation.
Love it. Harry Trades.
Hello.
Hello,
Right,
mate.
thank you for having me. Well, my name's Harry. I'm 27. I'm from London. I've been trading around 7 years. I first started looking at ICT's content back in around like 2020. I started on the Market Maker series, and then from there I went to the Model 2022, and then from there the 2024 mentorship was really what took it from like 0 to 100 for me. The way he broke stuff down and just gave us like the whole 7 a.m., 8 a.m., 9 a.m. sort of layout really helped me with with what the professor said as well, the smooth being made jagged, and just focusing on relative equal highs and then relative equal lows, made it really clear to me. So like the way I engage prices, I have the new day opening gaps from like from the last 5 days on my chart, and then the previous daily high and low from the last 3 days. So that's basically how I engage in price. I use the M15, M5, and then M1 time frame, and then look for a raid, and then a breaker, and then an inversion fair value gap. Then that's all I do. I don't really look at anything else. But like one question I had for Michael was, like a few days ago, I think he did a space around like what's going to happen with trading and like prop firms and stuff, and especially seeing what like what his son Caleb has been able to do. I feel like it sort of inspired me to not focus on prop firms as much and just sort of take what I can out of there and put it into a personal account straight away, which is what I've been doing. So, I mean, like, I think he said as well, like all these live streamers and stuff are just pushing their codes, not really giving too much thought about like their students and stuff.
Congratulations. I mean, I think the two things I'm pretty sure, I don't want to speak for Michael, but folks that come up and talk about their faith or how they found faith, and then the point that you're making right now, Harry, I think those are two good things that folks could bring up within the topic here, right?
Yeah, definitely. So yeah, I think like going to a personal account is definitely like on the horizon for me, and something that I'm going to look forward to doing. And there was one more thing actually that he mentioned, that like trading, like they may come for trading as well. And I'm not sure whether he meant just prop firms or whether or like if it was trading like as a whole. And like Michael, if they did do something like that, like what would it look like for trading, like if they did come for it in that sort of way?
I don't claim to be smart enough to know exactly how they would do it, but I think that 401ks are going to get hit. I believe that we're going to have situations in the banking sector that's going to be basically, money in deposit are just going to be claimed as the bank's. You invested in the bank. You took the loss with them. And the fine print when you open up a bank account, that's why they don't let you take it home. And they know you're not going to sit there and read every word in it. So I have a whole lot of opinions, but they're conjecture, and I don't want to dilute the conversation with that right now, because like I said, I'm going to refrain from these topics online. What I've said, I stand on, and I'll just leave it at that. Let's I guess, be comfortable with one another and say, this is what I've said in the past, and I'm not going to say anything more in the future about it.
Right. Yeah. That's cool. It's just like a little thing that I was wondering, because obviously it can be, especially for someone new coming into trading, and then they hear that sort of thing. It's like, well, is there much point in getting into it if it's just all like doomed? But
Well,
no, like, I'm
one
sure.
can look at it like this. Let's say I'm wrong. Let's say I'm wrong, and in my whole life, I live as long as the Lord lets me live. Say I live to be 90. You know, if we're all going to sit around and say, well, what's the point of this? Because eventually they're going to take away trading, and it doesn't happen until 25 years from now. You know, good grief. What have you done? You've wasted. So I look at it this way. While the opportunity exists, why not take advantage of it? What are you going to do instead of? You're going to work, right? So if you're content with working, and there's nothing wrong. I mean, working is minimum. Like, that's a minimum requirement. We all are expected to do that. And unless we have a business or, we're rich, if we don't have to do anything. So a minimum expectation in life is you have to work for your meat. So if you don't work, you don't eat. So if you're going to just say, why bother? Because this guy, Michael, said, it's going to be taken away. What you're just basically saying is you're looking for an excuse to avoid the work. Because someone that knows what they're doing, if you really put the work in and you do it the right way, inside of 6 months, what's the chance of them trading away in the next 6 months? Probably slim. But what happens in 6 months if you learn how to do this in your own hands? Once you have that skill set, no one can take it from you. No one can take it away from you. It's like riding a bicycle. And now you apply it with one micro contract. Are you going to get rich overnight in the first year trading with one micro? No. But what happens if your utility bills, your grocery bills are completely covered by that one micro? How much of an impact is that going to have on your life? See, someone today with the attention span of a gnat, because they've been watching too many TikTok videos, they don't appreciate the liberty of knowing that I can have a skill set that will take away one of, or if not majority of, my monthly expenses, or do serious damage to what I have to spend out of my paycheck each month or each week or whatever it is you get paid on. That liberty is such a relief. Like, think about let me ask you, what's your largest expense every month right now?
That would be my rent. Well, I've literally just moved out from my grandparents' house, and I pay like £750 a month rent in my place. But trading can cover that for me, like from the funded account right now, anyway.
Just one micro can do that.
Yeah.
So what would happen if you didn't have to pay rent out of your pocket, and your one micro contract, its only sole purpose was to just make sure that your rent is covered? What would that do for your lifestyle?
It would make it a lot easier on my mindset, like on everyday life, and not having to worry about like things like that. Because I feel like everyone does have that worry at the moment, like where's the next sort of bit of money coming from? If their job can't, support them in their everyday life, then what motivation do they have to go to work?
Laying your head down at night would be such an easy, effortless task to fall asleep and sleep soundly. Waking up would be a joy. Walking through the day would not be full of anxious thoughts, thinking about, man, I got to get out of this. I feel like I'm smothered. I'm suffocating. I need to find a way to get a better way of doing this. But you're not rich. But that rent that's being covered by that one micro contract, that's my challenge to all of you listening. That's my challenge to you. Spend the next 4 weeks and see if you can get $1,000 with one micro contract. Show me that you've applied the stuff that I'm teaching and that it failed. And I want to see the ones that came forward with it and see that it worked. You can't do more than one micro contract. You're only going to try to make $250 a week. It's easy to do. You're not risking a whole lot. And the joy of knowing that you can make one of the largest expenses, say it's groceries. What do you spend a month on groceries?
Yeah.
No, I'm asking you, what do you spend on average a month in groceries? What do you think it is?
Well, maybe like 100, maybe £150
a month.
maybe like $180. Yeah, maybe.
What are you eating? What is it you're eating that's little? That's a little bit. Like
That's not a lot, bro.
yeah,
Well,
that's nothing.
I've only been like been moved out like a week, so I haven't really
Oh, okay.
had like the
You're
full.
about
Oh,
to
okay.
find out. Yeah, you're
I
about to
haven't had
find
the
out.
full scope, to be honest. But yeah.
I'll say it this way. I have a niece that lives with me. My youngest son still lives with me. My wife and I. Okay. We spend about $2,300 a month in groceries. And I'm telling you that if you're a single person, I think it's reasonable to anticipate around $600 a month. And that's just like, your every household stuff. You need cleaning supplies, toilet paper, paper towels, and detergents that you use to clean your dishes while you're eating off of it, and your main staples that replenish your pantry with. I think that's a reasonable number. It may be higher, maybe slightly a little bit lower, but I can't imagine it being slightly lower because everything's just expensive and people need to eat. So if you don't want to deal with $1,000, okay, whatever your grocery bill is, aim with that. One micro. And I promise you, if you do it the right way, it'll convince you that you've been pushing too much emphasis on things that you can't do with your present skill set. But if you dial it all the way back to the smallest degree of effort, which is one micro contract, $2 per handle, $2 per handle. If you did that with your funded accounts, don't do more than that. Build it up over the course of 4 weeks, and then take out your grocery money, take out your rent money, and then repeat and reset and do the same thing. Don't go to 2 contracts, just do 1. That's all that account does. That's all it does. They're not going to say, well, we got to move you to a live account because you're just killing us, because you're just a small little fox nibbling on the vine.
Yeah.
But you will be able to make a huge impact in your personal income. And then what will happen is after you do 1 or 2 months like that, they say, okay, I can do this now, so let me scale up to 2 or 3 contracts. And then that money you build up, you put that in a live account with a real regulated broker. And then go back to doing what you were doing before. Keep your little funded account thing going on, but trade your live account too, 1 micro. Not 2, not 3, 1 micro. And you do this. Now you have 2 accounts and you build it up. And over 6 months, either have another account that you use for wealth building where you don't take any withdrawals from it. You don't do anything like that. You got income coming in for meeting bills. You have another one that is just for big expenses that you don't think are, like it's an emergency fund. It used to be people are told, hey, save up a little bit of money and have an emergency fund. Well, how easy is that to do now? It's hard. It's very hard for the average person to do that. So you either have to have a side hustle, a business or something like that, or you don't do it. So by creating an opportunity for a funded account or a very small cash account to build that up, and then you let your wealth building account, so you're gonna have 3 accounts. One's for meeting ends, one is for unexpected things that something pops up you didn't expect. You need tires. You have an issue with your alternator in your car. Something goes wrong with your car. You need a down payment on a car because your car gave up the ghost and died. Where are you gonna get that money from? Well, by using this account to build up for that purpose, you're not grabbing out of it just because you want to spend money. You're doing it so that way it's unexpected expenses. So you're building discipline. You're being a fund manager. You're getting your ends met by the first account that's still going. And then you slowly work up gradually as your skill set permits it to allow you to do double that once in a while. And then go to 3 times that. And then quadruple that. And then never even touch a mini contract. Just stay in the micros.
Yeah,
and you will do it. Yeah, you'll literally be able to sleep. You won't be fearful of the trades because there's not a lot of money. It's not a lot of money coming in out of the account. But when you change your idea about money, what are you using the money for? It's a tool. But everybody thinks that money has to be a status symbol. You're looking at money all wrong. People that have money, I don't look at my money as a symbol of influence. It's a tool. It makes me money. I don't care what anybody else thinks about what I should or shouldn't do with money. I'm the one that doesn't work. But you have to start somewhere. And this is one way that absolutely works. It works. And I want to see people try to have this mindset going forward, because you'll see just a little bit like that will prevent scared money. It will prevent over trading. It will prevent this toxic thought process that we place on ourselves, because you're looking at all these influencers. Maybe you're looking at me and you're thinking, I'm not impressed by this. This isn't enough. What ain't enough? I can tell you something. As a 20-year-old, I was paying $416 a month in rent for an apartment. Cody, my oldest son, was with me basically 6 days out of the week, and his mother had him 1 day a week on Thursday nights. If I would have had a micro plan like I'm talking about right here that paid my rent every month, that would have been a big weight off my chest. I wouldn't have been worried about, man, I hope this doesn't work in my favor, or that doesn't work, against me. I would have been, this is what I have to do, because I had just recently filed bankruptcy. I had to start all over again. I know what it's like to do this. I know what it's like, but now it's even more complicated because you have all of the inflation, and it's going to continuously get higher, and gas prices are going to get really high. Heating costs are going to get really high. What are you going to do, listeners? Listen, what are you going to do to mitigate these costs that are increasing exponentially? What are you doing? Because you're not fixing it by doing heavy leverage trading, multiple accounts, 20 accounts, buying all these accounts. Fuck that. One account. Stop making these funded account companies fucking rich. Start milking them. Drain their ass. All of you collectively could be taking $1,000 a month out of them, and they're not going to rush you away. They're not going to broom you away because there's only 1,000. What logic would that be? You go forward in the public and say, this is what I've been doing. They close my account on me. Oh, shit, that's bad. None of them want that bad publicity right now. So you don't have to worry about it. Just make small, little bite-sized approaches to building the money up each month. You get one payout a month. Work towards that one payout. If you can't do that, you can't be a fucking trader. You're not disciplined. You won't be disciplined to do it with more money. What makes you think if you can't do that, more money, more leverage is going to do it? It's not. You're going to be scared because you don't know what the hell you're doing with one contract. Now you're going to trade with 20 minis, 15 minis, 30 minis. Just the numbers alone, and they're not even real money. That fluctuation is going to freak you out. Oh man, what is going on? I can't stomach this. But every one of you listening can stomach one micro contract, 75 handle stop loss with a negative R. You can all stomach that with an obvious draw on liquidity. Tell me I'm wrong. Prove it this month. Prove it over the next 4 weeks. Tell me I'm wrong with data. This is what I did. I used a 75 handle stop loss, and I'm aiming for the close proximity liquidity where it's smooth. I promise you, you're going to come out positive. I promise you. And you won't fear it. You won't feel it. You won't feel the pressure. You won't feel any of the anxiety, but you'll see the math holds up. It holds up. And when you change and you have this paradigm shift about money, you allow money to scare the shit out of you. It's got so much power over all of you, so much influence over you, that it makes you forget what you learned for months. It makes you forget your model. It makes you forget about what PV arrays you're looking at. You're looking at price action moving all around. It's like, what in the hell am I looking at? I better just jump in here because I can't stand it. I can't sit still long enough to focus, and then just get in here and just do something. Because if I make money, it'll break me out of this mindset, and I'll be better for it. No, it doesn't work like that. And none of you are journaling to recognize that that's what the problem is. You hold money to a degree of influence over you versus you influencing the cause and effect of using money as a tool. You have to master that money. Otherwise, the money's going to master you. And how's it do it? It makes you fucking broke. It makes you regret ever doing it. And then you'll hate me, you'll hate trading, you'll want to do nothing with it, and you are cheating yourself because you're giving the enemy the exact way in to get to you. Anyway, I hijacked your time, but hopefully I gave you something that was useful.
No. That's really good. Thank you, Michael. I really appreciate it. There's a lot to think about there. I think especially these days, there's a lot of influencers around flashing all these funded accounts and making it look easy. And all these funded accounts give you like, oh yeah, you can trade 30 micros on your challenge. It's like it's giving the people that ammunition to fail instantly. which I think a lot of us have been there. Like we've all tried to do like something with a funded account that hasn't gone too well, and then you're like, oh damn, like go and look at Michael's Twitter to see if he's like got a trade on or something like that, you know.
Yeah.
But
there are influencers, and some of them are students, and some of them are students of mine, but they are familiar with who I am and what I do. When they're on their live stream and they trade and they use what it is that they trade with as a model, and they're not using a lot of leverage, like for instance, like Tanja trades and Lumi traders, Dasha, they're actually trading on their stream. They're not doing heavy leverage, but they do give away those codes and stuff. They have a little niche business they're doing. It's a little boutique thing they're doing, and that's fine. I got a problem with that because they're still doing something that's realistic. They're not in there trading 30 micros, 15 minis. Okay, look at what they're doing. Their leverage is very, very small. They're listening to the logic I'm showing you. Don't try to make a lot of money in these conditions right now because it'll take it from you easier than you making it. You got to remember, you're just now starting. If you just started in the last 2 years, you don't have the experience to be trading with multiple mini contracts in this leverage and that kind of leverage in this volatility. You don't. I'm gonna tell you, you don't. I don't care how much fucking money you took as a payout. That's not an indicator. That's not a report card that tells you, Michael, you're wrong. That's just you having a hot lick in the marketplace. That's what that is. We all have them. If you stay in it long enough, you'll get them, and you think you figured it all out until you don't. Then you realize, oh shit, I didn't know as much as I thought I did. And then you're met with this, well, what do I do? And the first thing comes to mind is bigger trades, more accounts. Let me link them all up because I got to get it back. I got to get back to where I was. No, you don't. You got to get back to square one. Recalibrate, like I was talking to the other caller that came in. Guarding your mind is the first primary tool to finding success. That means don't let me influence. Once you figure out what you're supposed to do, don't let me change you. Don't let me tinker with it. Whatever I teach going forward, don't let it in. Don't let it in. You found your cookie cutter. Don't let anybody else influence you away from it, because whatever that repeating phenomenon is, it's scalable. You can make it as big as you want, or you can keep it simple and have this like a micro contract, and that's all you ever do. If you only trade one micro for the rest of your life, you know what you're doing? You're doing better than 99.9999999% of every motherfucker that ever considers trading ever in their life. Most people can't make money. And if you can be comfortable with not fearing the outcome because you're doing one micro, you're trading to a smooth edge with a bias that's obvious when it's one-sided. Once you get your little piece of dough get cut out with that little cookie cutter, step away from the marketplace and don't do anything else. Exercise discipline over yourself. Over time, you'll grow in confidence and you'll gain the appreciation for what you don't appreciate right now. You can't appreciate it. You can't appreciate being consistently profitable for 8 years, 10 years, because you haven't been doing it long enough. But the lessons you learn in the first couple years, risking very little and protecting your perspective, not only over money, but what you think you can do and what you're holding yourself to in terms of the realm of reasonable. What's realistic and reasonable for you right now? Is it realistic for you to go out there and think that you can do $20,000 payout in the first week just because you can afford to buy the accounts? Just because you can charge on your credit card doesn't mean that that outcome is going to happen. How much anxiety are you going to have trying to do that? What happens if you fail? You're going to have to reset it and buy it all over again. How much more confident are you going to be the second time having to try it? Think about how that is different from, I only have to use one micro contract. And I am content with if I can make $250 over the course of 1 week, just simply trading the first percent of fair value gap when the market's likely to go in a parabolic run for a couple handles. One micro contract, 200 handles, that's $400. You've already padded out 1 3/4 of a week's worth of effort. One trade. They're easy. They're there every week. They're not every day, but they're there every week. And by you understanding that you don't need to do so much, you don't have to do all this heavy lifting. It's like a men, when we join the gym, we want to hang out with our friends and we want to start building our muscles up. What do we do as young men? We go in there and we want to put the heaviest weight because the guy we're lifting with, he's doing a whole rack. And he wants to look like he's the strong guy. He might be the strongest person there. But who the fuck said that you are expected to do the same way he's doing? The same number of sets he's doing? Nobody. But that's an illusion that you have to live up to that. I'm telling you, where the fuck are you making your money? Are you making money doing all the shit you're trying to do right now? Because if you're not, you can make money with one micro contract. One micro contract pays the fucking bills. But none of you want to do that because it's not sexy. Nobody's going to glad hand you on social media and say, look at you, man, you made 75 bucks on that trade. That's fucking awesome. But I'm going to tell you that is awesome. That's awesome because that's scalable. What happens if you would have did that with one mini? That's $750 fucking dollars. Did you make $750 today in 37 minutes at your job? Fuck no, you didn't. You didn't do that. And that's what you need to be thinking about. You need to think about, okay, what's the smallest multiple that I can use in action, in my own hands, with my own effort and my own understanding and present skill set, applying with one micro contract. Right now, 10 handles seems like it's impossibility because you're brand new. 50 handles seems like, oh, that's a stretch. I could probably do 20. But over time, a couple months, you'll see that 50 handles is not as hard as you thought it was. It's just looking for the setups and the framework over a different time frame. Different PV array, a little bit further outside your realm of comfort. There's a lot of people out there that talk a lot of bullshit, and they're only trading in less than 10 handle runs. They're looking at these little tiny little bullshit bars, okay? That they're talking about everybody else, and they can't do shit outside of that. Why? Because they don't have visibility. They don't have visibility, but they're supposed to be multimillionaires, but they're not multimillionaires. And you listen to people like that, and you take the impact of their negativity, and it holds you back. Instead of just simply saying, you know what harm would it be if I listened to Michael right now and said, I'm going to spend the next 4 weeks, I'm only going to use one micro contract, and I'm going to try to get my grocery bill for the month. Can I do that? If you can't do that, why are you trying to do more? Because it's going to show you what you're doing wrong, what you're thinking about money and what you're thinking about trading and your lack of or your model being inappropriate for you or not as well defined as you really think it might be. Maybe it falls short. You won't know unless you do this. You won't know. What happens if you do it? And you find out that all the things you've been doing, making it harder than it's necessary, what happens if you have this paradigm shift? And the things that you worry about every day, you stress about, every day is exciting when we wake up, isn't it? I can't wait to see what the market does. 9:30 opening bell, I'm gonna see that first percent of fair value gap. Yeah, it's fucking great, man. I love it. Now go back to what it feels like when you lay your head down at nighttime. What did you do with it? Did you make money with it? Did you abandon the idea because you saw some flutter of bullshit, or maybe you saw me post something, or maybe you saw somebody else post something, and it changed your opinion because you're allowing the influence to do it? You're not blocking out everybody, even me, and sticking to your model, where you can close your eyes and say, you know what? Michael's probably talked about something really cool today, but I don't give a fuck because my model said I was supposed to do this. I followed my model. I didn't look at anybody else's bullshit. I didn't listen to Michael's stuff on his X feed because most of the time he's talking out his ass because it's his playground. I'm following what I learned how to do. It works in my hands, and now I can lay my head down at night because I did exactly as a trader should. Stick to their own plan, stick to their own lane, mind my own fucking business, and I don't give a shit what anybody else is doing because I'm not going to give you your bill money. I'm not sending you any money. I have people every day begging me, I'm really short on money and I would really appreciate if you would buy me a laptop so I can start trading. The fuck out of here. You're asking for something that, get a job, earn that. Where are you getting the money to trade from? Forget the laptop. What's the money you're going to use to trade with? Everybody's begging for money right now. You will have that one skill set that's repeatable. It's scalable. You can make it as big as you want it over time, but you have to gradually grow into it, working your way up from one micro, doing it every single day, being comfortable with just enough, being content with enough. And that's a skill set that is largely overlooked by everybody because it's not exciting. Nobody wants to join a mentorship that says, I'm going to teach you how to make $65 a day. The fuck, who's signing up for that? Nobody. Nobody's signing up for that. I'm going to be honest with you. I was talking to Cameron. I said, listen, you know what would be funny as shit? God's honest truth, I'm never doing a mentorship. I'm just saying, I jokingly said to him, I said, you know what? I want to see what the reaction would be if I said, listen, I'm gonna do a paid mentorship. Okay, it's $25. And I'm gonna teach you how to make $65 a day trading. And just to see, and I know right away there'd be a lot of people just because they want to be a part of it because it's my name attached to it. But largely, nobody would really take that serious. And in fact, I would get a lot of backlash and comments and see you went against your will and you need the money, or you went against your word rather. And it was just to prove to him that largely most people wouldn't do it. Why? Because they look at the outcome as the report card. That's the value. You're saying all I can make is $65, not realizing that what requires that $65 payout on a micro, which is $2 per handle, is about 30 handles or more. Now, what would you do if you had 15 mini contracts on a 30 handle run that you can get just about 4 or 5 times a week? You're going to make money, aren't you? But the average person, they're not going to look at that because they aren't taught to look at money that way. They don't have the concept of scaling. They don't have the concept of compound interest. They don't have that. They're not taught that way in school. They're taught to do simple things, add addition, stuff like that, and just be a drone, be a good slave. But what happens when you sit down and you say, you know what, I'm going to work this out where over time, I'll give myself 3 years. Michael said he took 20 years. He sat down, mapped out 20 years, and he's going to retire. What happens if you give yourself 3 years? What if I'm wrong and then they let trading go on unobstructed for 3 years? And you do this and you convince yourself that you're better at this than you are afraid that you're not going to be good enough. And you're able to meet your ends a little bit better. And you build it up a little bit more and you start scaling it. In 1 year, scaling this, you can beat Larry Williams' record. The math's there. The math's there. One contract in silver right now. If you started, let's say, for instance, say you started with $20,000 at the beginning of the year. Now you've done this for a little while, and you've worked for 2 years working micro, and you built up the consistency and the confidence. You know your model, you know yourself. You're not trying to do anything more than is necessary. But third year, you have a little bit of equity in your hands, and you're going to go for it. You're going to let money management dictate how fast you can scale up and when you got to scale back and draw down. Look at daily range in silver right now. I'm convinced that the person that's in the #1 spot at Robbins right now is trading silver. Because in the beginning of the year, they didn't have the problems with the leverage or the margins that we have right now for silver. So all that big movement came, and if say he had, or she, I don't know if it's a guy or a girl, I don't know. People think, I never said it was me. I don't even know if it's a person that trades, but I see a lot of people pretending that they're that guy or person, and they're not. But in one daily range, you can get 20,000 easily with the movement that silver's doing. So what if they get $20,000 in profit in one day, they're making 100% return on that account every single session. So what happens if they caught a big run? They're letting money management do the heavy lifting, but they're following a model. And if you're using the volatility that parlays that account up more and more and more, they're not doing more trading. They're just applying more allocation to what they're already trading. And that's all you'll do with doing this, but you have to start somewhere, and that means ground zero is 1 micro. And if you can't do it with 1 micro, that's the easiest litmus test that you would not be able to do it with more. And nobody teaches this way. Nobody does this. Nobody does this because it's not interesting. I guarantee you, most of you are just zoning out right now. You're like, this is bullshit. I don't want to hear about this. But you're the same person who's going to complain that you can't make your fucking bills right now. You're going to be the first person that complain when your heating and air conditioning bill and your fucking gas bill when you fill up your gas tank in your car. Why is it so expensive? This is bullshit. When none of that stuff would be felt as much as if you were doing this. Mitigate it. Nobody's going to hand you the fucking money. You're not going to win the lottery. So why not just strap in and say, okay, I'm going to take this old man's challenge and I'm going to see if I got what it takes to be a trader. I'm going to see if I can do it. Because if you can't take this challenge and pass a boot camp of 4 weeks trading one micro and make $1,000, you can't fucking trade. You can't trade. And you'll find all the problems, if you're honest with yourself and you journal, you'll find all the problem areas that you need to fortify. In 1 month, you can fix your shit. How many of you are going to do it? If you're listening to me, if you want to take that personal challenge, say, I'm going to do it, ICT. Just send it to me as a post to me in X. If you're not, then
Can we call it the mitigation, the mitigated trader? Something. I mean, you're literally mitigating your grocery bill. You're literally mitigating an important bill utilizing the trading skill. That's what I thought of as you're saying it. Like, I love how you said mitigation, but I love that challenge, especially for our community, Michael. Like, I really do.
You can name it whatever you want to name it.
I'm thinking of it. I'm thinking of something in regards to like a mitigation, something about mitigation. I mean, you're mitigating bills just by trying to utilize your real life skill set with a real life account, not overtrade, not play games, legitimately tap in and pay a bill. I think that's beautiful.
Or like the ends meet challenge.
Oh, I love that.
Yeah,
I like that.
Whatever you want to get it. But just do it.
Well, I like that, and as a community, we should try and put that together. And then, I mean, I'll try and email maybe something to you, Michael. So maybe if you just look out for maybe something, I'll try and follow up with you with something if we get something from folks. So, but yeah,
I would be very interested to see the participation, even if you don't pull it off, but you tried, and then you tell us in a space like this, where this is what I encountered when I did it, and this is what I learned from doing it. That's beneficial. That will encourage other people to be honest with themselves, because there's a lot of people out there that simply are ignoring their problem characteristics. You're hiding
this is going to be, I'm sorry, this is going to be a trader roundup challenge. That's what we're going to call it, because our community is who you're proposing this to. I mean, the extension of your community, clearly, but I really love, and I'm excited. I hope people really take this on. I really am.
It's an interactive study. It's fruitful. It will show you where you need work, but it'll also convince you that, remember, what you're doing with one micro, it's scalable. When you build up more equity, that means more leverage you can have. But it has to be a reasonable growth period to when you're allowed to up to another micro contract. And I'm of the opinion that $2,500 is the minimum if you're going to do one micro. If you're going to trade with a real cash account, $2,500 is the absolute minimum. That means they've been trading for a while and they have a model and they're not going to be reckless. $5,000 is more closely in the realm of the majority of you. But you're doing it with a demo account. They're not doing it with a funded account. I'm just showing you something to practice to see if you can stick to an approach, find your problems, find your flaws, find your strengths. But can you find at the end of 4 weeks a net gain of at least $1,000? And if you can do that, what says you can't do that? As an approach to this, help you give yourself a break in your cost every month. But that's all I got, guys.
I love it. The ends. I love that too. The ends challenge.
Well, I'll jump off now, Kitt. Thank you for having me as a speaker.
Well, absolutely. Thank you, Michael. Thank you, everybody, for being here. Trader Roundup 8:15, 8:14. I like the time. We made it. We made it all the way to 8:14. So I'm just going to say with love, thank you, Michael, for hanging out. I mean, he's pretty much came in dunking. You guys know, you heard the challenge. There's a lot of information that's been recorded. All you got to do is go back and listen to it. I would implore that you tap into the mentor. and his mastermind. And we'll see you on the next Trader Roundup. Have a great one, everyone.